Good morning, ladies and gentlemen. Thank you for joining us today for our webinar titled Battling Financial Crime 4.0 in the New Age of Finance. Special thanks to the speakers for taking the time to share their views with us today, and also GBG for sponsoring this webinar. Before we begin, I'd like to apologize on behalf of Patricia from HSBC, who informed us yesterday that she won't be able to join us due to some internal issues. Now, with that out of the way, let's talk about the topic of the day. Financial crime is a growing issue in our industry. Globally, nearly 600 billion US dollars is lost each year to cybercrime. And in APAC alone, that figure is close to 171 billion US dollars. On top of the rise of financial crime, you also have new type of crime typologies that are brought on by new business models and even digital assets entering into the fray, which adds complexity to already a very difficult issue, which is why today I'm glad to be joined by a panel of experts to discuss this very important topic. So, right on top there, we have Dev Demon, who is the Managing Director for Asia Pacific in GBG. Below Dev, we have Raj Vishwanathan, who is the Chief Information Security Officer for NUM. And below Raj, we have Victor Apps, who is the Director and also a Financial Crime Specialist for Asia in Standard Chartered Bank. Gentlemen, welcome to the show. Thank you for joining us. So maybe we'll kick off the show with having Dev to kind of help us to define what financial crime 4.0 is, since it's a term that you guys coined in GBG, and then also paint us a picture of the severity of the financial crime issue that we're facing in our industry right now. Dev, you have the floor.
Thanks, Vincent, and thanks again for having us, and thanks to my fellow panelists for making the time this morning or this afternoon, wherever you are in the world. So really, Financial Crime 4.0 kind of summarizes a lot of what you just described in your opening there, Vincent. So it's a term, as you said, that we coined at GBG to kind of encapsulate the increasing sophistication and severity that we're seeing within the fraud and financial crime sector. Really, it mirrors what we talk about as Industry 4.0. So if you think back to Financial Crime 1.0, it was a very unsophisticated first-party fraud, maybe over-the-counter type fraud that you would have seen of an in-person transaction. It was very simplistic. It may have been for a loan or for the sale of an unauthorized good. You then go through 2.0, 3.0, 4.0. You fast track to where we are today, which is 4.0, and we're in an era of very smart technology, which is enabling fraudsters to increase the level of sophistication that they put into devising the schemes and the traps that they operate. Obviously, more and more personal data out there, more and more digital channels that are being opened up, which just increases the prevalence of opportunities for fraudsters to defraud good customers. So 4.0 really describes that, and it describes how in a very short space of time, the level of sophistication has skyrocketed, and something we expect to continue to skyrocket and continue to get more and more challenging.
Thank you for setting the tone. In fact, talking about the rise of financial crime, I myself was a victim of financial crime just last month. I had an unauthorized transaction of over 3,000 US dollars in Canada. So, I'm a true believer in this rise. So let's move on to Raj. Raj, NEOM being a global payments company, I think it's a prime target for a lot of these bad actors, right? With money laundering, CFT, a variety of things that I'm sure would be interesting from your angle as well. So paint us a picture from where you stand. What is the severity of financial crime right now?
Sure, Vincent. Thanks for having me. Before I begin there, I think I'll just reiterate why it's so important for NEOM and why it's so key, this topic for us. As you rightly said, NEOM is Southeast Asia's first global B2B payments unicorn, and we provide businesses of any size access to global payment services through an API. So if it's a small startup in the initial stages, or it's a big institution, you can just connect to our platform and start sending money, receive payments, issue cards, both virtual and physical, globally. And also, you can provide these kind of fintech services to your clients as well, right? So with more payments in almost 100 plus countries and 130 million plus end customers, you can now imagine why it's so critical for us, this topic. And And thanks for bringing this topic and bringing us together to talk about this. And the statistics and the trends, or some of the trends that you had mentioned, are not comforting either, right? There's a definite increase in the number of attacks and the type of attacks, and partly it's because of the increase in the channels. So there are trends that almost the just in Asia alone, there's been an adoption of digital banking, which moved from around 50% to 90%. So the greater adoption of technology means the greater potential for crime as well. And we have seen that ransomware has been one of the fastest growing attacks. Right? For entire to 2020, we had around 1,000 plus attacks, and that number has been passed just the first 6 months. Okay? And that's an interesting link between ransomware attacks and some of the new digital currencies that we are seeing. Right? And that's leading to a different type of attack vectors and criminal operations that can come and play a role here. So yes, it's troubling in the terms of trends and statistics that we are seeing, and that's why we need to play a key important role in managing financial crime.
Thank you for painting a picture. Certainly, the emergence of these digital currencies are really bringing on a whole new dimension to this conversation. Certainly something that we want to dive a bit deeper into after this. Let's move on to Victor. Victor, paint us a picture of the severity of financial crime, and specifically in Asia, where you do specialize in.
My focus is mostly on fraud, so I'll speak mostly to that.
Mhm.
I'm just quite impressed by the growing sophistication among fraudsters. And I'm not sure I should say impressed, but they are quite clever. They're quick to market. They create a good product, and they operate cross-border. They can do things that we can't do. For example, during COVID-19, there was a fraudster attack targeting people for Hong Kong Post. Oh, Hong Kong Post sent you a message. Okay, I'm getting a lot of deliveries because it's COVID-19. Makes sense. I'll put in my information. Bam, you get defrauded. And the way they're able to find those vectors and the social engineering aspect, I'm quite impressed by. Also, the growing sophistication can be seen in the fact that Raj mentioned ransomware. We have ransomware available in almost a franchise model. You can subscribe to a ransomware tool and you can launch your own ransomware attack. It's become, I don't want to say an industry, but there is an increasingly professional element behind it, which makes our job harder. These aren't emails saying, oh, I'm a Nigerian prince, please send me money anymore. These are sophisticated attacks. But at the same time, we can't forget about the old stuff. We still see stuff like check frauds still going on. And things we haven't seen in a while, like SS7 diversions of OTPs, that still happens. And there was a recent incident in Singapore. So our job's harder because we still have to do all the old stuff, but also try to keep up with what is a fastly developing rogue space.
It's interesting because, like, when we talk about the tech industry, we talk about the startup space. There's the whole no code and low code movement going on, right? I guess even for ransomware, there's the kind of ransomware as a service that's kind of available to fraudsters everywhere these days, which is kind of a scary trend. Um, Maybe we'll move on to the next question by asking something controversial. um Speaking of financial crime and money laundering, of course, some of the biggest one of the biggest thing that's happened right now is the Pandora leaks, right? So maybe I want to kind of get the views of the panelists on, what are your thoughts on the role of this kind of offshore havens in potentially enabling money laundering? Who would like to go first to take this contentious question? Any volunteers?
I will. I'll go first, Vincent. But
Sure.
just
Dave,
maybe
go
just to
ahead.
kind of segue into a different
Mhm.
question, or make a different
Sure.
point to answer your exact question around. Just we
Mhm.
heard in the intro there are a lot of technical terms, but you
Mm.
shared your experience of being defrauded last week, and I think it's a reminder that actually, what are we actually talking about? It's people like you, good people, who are losing, money that they need to provide for their families and for themselves, and get access to different services that they need. So I think it's just a good point to bring it back to when we talk about all this very high-tech, fast-moving space, there's always a human being at the end of it that's unfortunately losing out, and losing out to people who are doing some pretty terrible things with the proceeds, which kind of links me back to your point around the Pandora Papers. I think to answer it in a non-controversial way as best I can, I think what it reminds us of is the need to continue to perform the basics, back to the point that was just made around some of the due diligence around entities that you operate with and you work with. So making sure that you do the boring stuff, you do the 360-degree view of making sure that you've really linked the entities with one another and you trace things back to the ultimate beneficial owner. You've really thought through the directors' checks and things like that. Those points are there for a reason, and that's, I think, just a good reminder of needing to continue to perform some of those hygiene checks before you do business with people.
Thank you for that, Dave. Raj, would you like to add to this?
Sure, definitely. And so Pandora Papers have been a big thing now, but we shouldn't forget there was Panama Papers in 2016.
Yeah.
There was Paradise Papers in 2017, and
Why
all
does
these
it
are
all
based
start with
on
P?
at least rhyming for anything else. So these are based on leaks, right? And not based on any additional measures that have been taken internationally. So these will continue. We'll continue to see these happening. Right? There'll be a ton of more firms where they have trove of information, and this trend we will continue to see. The offshore havens are unlikely to disappear. Right? But as Dave rightly mentioned, what that means for us is to get back to the basics, make sure that we have the right controls. We look at automation for those controls, right? And that's where we need to focus our efforts on. And we will let the regulators look at having some international measures and see how they can deal with these offshore havens. And then we can look at, okay, based on those regulations, what actions we need to take. But again, back to basics, right? Focus on our basics.
All right, thank you for that. Victor, since you specialize in fraud, is this a topic you want to comment on, or would you like to move on?
I don't think I have anything hugely drastic to add there. I might say that the Asia impact, specifically from the Pandora Papers, is a little bit limited, mostly focusing on Australia and Sri Lanka. I think it's a testimony to there are these large financial ways of moving money that we have only limited eyesight on. And it's not just limited to offshore havens. I'm talking about money mule accounts. There are ways to move. And also, if we want to go into digital assets, I think it speaks to there's an obvious layering aspect to it. But specifically, the Pandora Papers, given the limited Asia impact, and given that a lot of the transactions were legal, they look bad. And they make bad headlines, but quite a few of them. Now, there are, of course, kleptocrats in there, which need to be looked at, an exposure there. But the leaks in of themselves don't necessarily point to criminality. Or the papers in the leaks, yeah.
Yeah, that's for sure. That's a good point. But I guess it also gives us a sense of... Sorry, I lost my train of thoughts. Let's just move along.
Well, I mean, it shows us the rich play by a different set of rules than the rest of us.
Yeah, no, for sure. But there's nothing criminal about that. It's just there's a different set of rules for different classes of society, right? Let's move on to the next question. While I have you on the floor, just broadly speaking, how prepared do you think the banking industry and the financial sector is in battling financial crimes?
I think it's an evolving space. As I mentioned, the fraudsters evolve at a much faster rate than us. And the reason for that is quite easy to see. Setting up a new data surveillance system requires a lot of investment, a lot of work. You need the budgeting. You need to give 2 years for that. We also hugely regulated. So we have to work through those, what's the word I'm looking for? Hurdles, jump over those hurdles. So we do have tools, we have good people, but they evolve faster than us. And we are still struggling to catch up. And also another element where I see some improvement, but it's not quite good enough yet, is on data sharing. banks sharing information between each other about bad actors, data sharing between countries, because banks, fraudsters have no problem working from different countries and sending money that way. But as sometimes the banking space can get a little bit politicized, it can make challenges. So we are evolving and trying to meet the threat, but they are faster than us.
That's for sure. I think even data sharing domestically is a little bit of a challenge. What more
Mm.
cross country, right? And a lot of these fraudsters, a lot of these bad actors, they don't operate within one geography, and I think that's really a challenge that the industry needs to step up to.
It's also data
Mm,
privacy. That balance between managing financial crime and
for
respecting
sure.
people's privacy is, I don't think it's been fully answered yet. Some jurisdictions, I know Korea and Netherlands, have some really
Mm.
good data sharing platforms, again, within their own country, which is good, but also has its limits.
Yeah, I think even Singapore, under the Monetary Authority of Singapore, they've also recently launched a platform to battle this kind of things as well, which is, I think, a good first step.
Mhm.
Eventually, I think all this cross-country collaboration is where we really need to go.
We
Um,
see the same
thanks,
movement in
thanks for
Hong
the
Kong as well. Yep.
yeah. Thanks for the insight, Victor. Let's move on to Dave. Dave, now working with a lot of your clients who are banks and whatnot. Do you think they're prepared? How prepared are they in terms of battling financial crime?
Yeah, I think interesting to hear from Victor, who's kind of living it day by day. I think he made the point
Mm,
earlier in the session about collaboration amongst fraudsters, and I think what we drive and what we firmly believe in at GBG is collaboration within the industry to share some of the data he talked about, so that I always talk to our customers and say, fraud is not a competitive advantage necessarily. The proceeds of these things are going to people that we do not want to have them. So actually, it's in your interest to collaborate, because if you don't get defrauded, somebody else is going to, and when they do it, they'll just keep going until they find someone. They don't care. They're not brand loyal fraudsters, unfortunately. They care about the almighty dollar. And the other point he made around privacy and the balance between financial crime, privacy, fraud, I think convenience also plays a big part of that as well. So as consumers, we expect more convenience. We don't want to give away too much of our privacy, and we don't want to be defrauded. Well, that triangle kind of doesn't work. So there is a kind of inherent fraud risk as you're increasing the convenience, and obviously we see that through increasing digitization, and we see it through new channels of applications, new channels of leads and things that we're seeing in the banking sector. To answer your question about what we're seeing definitely a real rise in the number of RFPs and new projects that are being kicked off currently. We definitely saw that pause during COVID, which I guess ironically is the worst time to have paused it, because again, back to Victor's point, it was paused because banks need to worry about budgets. Fraudsters don't care. They continue to plow on. They see new doors opening. They think that's another way for me to enter and make my profit. And so we are now seeing some of that catch up. We're definitely seeing more banks take this more seriously. We're definitely seeing banks more interested in some of the advanced technologies instead of just the very basic rules. So, and also actually a real keen interest in getting access to differentiated data sources so that they can have a richer view of the consumer and the ecosystem. I guess the challenge, as kind of Victor said, is the banks are catching up, and the fraudsters will then innovate again. And I'm using words like innovate, profit, revenue, because that's how these guys operate, right? They operate as businesses, and they are there to make money. And there is this constant, struggle between the good and the bad. And unfortunately, currently the bad moves first, and the good has to catch up. So I do think we're seeing more preparedness. I just think it's going to need to continue to get more and more prepared as new pockets and new typologies emerge.
for
I'd like
sure.
to add something to
Sure,
my
go ahead,
previous
Victor.
point, inspired by
Yeah.
some of the stuff Dev was saying. I do think banks need to, I think we can always think about the future and trying to catch up with the cleverness of the fraudsters, but we can also go back and revisit our principles, make sure that we're doing the basic stuff correctly. Because sometimes I think we're thinking, oh, we need to figure out this fancy way to tackle that scheme when they're leveraging off of this platform. But you'll be surprised by the number of banks out there who don't have stated recovery procedures? Do you have MI around fraud losses being incurred by your customers? Do you have good partnership with cybersecurity, advantage of it? What about lessons learned dissemination? A lot of these international banks, we have a fraud typology might hit in, say, Nigeria. Is that typology being sent around the organization in a quickly effective manner so they can respond as well? So there is the data element, there is the new monitoring, but also you need to go back to your standards, go back to your core values, make sure, and also your frontline staff needs to feel empowered to ask questions. The most, they're the people who will be dealing with it. And so you need to make sure they know that you equip them sufficiently enough. So there's the data element, but there's also going back to your basics and making sure those are strong.
As it is with anything in life, it's always important to go back to basics. Yeah, thanks for adding the points. Dave, do you have anything else to add before we move on to Raj for his views?
No, I just think the other point that comes to mind as Victor was speaking there is around education of the consumers as well, and I think that's a responsibility of everyone in the ecosystem too.
Yeah, exactly.
Definitely, for sure. Let's move on to Raj. And Raj, of course, the space of startups is different from banks, right? And I think, maybe not necessarily all startups has the heavy funding that Neum has. Do you think maybe some of the smaller players or medium-sized players within the fintech space are well equipped to kind of deal with this financial crime? And as I'm sure you notice also, they are increasingly becoming a target of these bad actors, right?
Yeah, exactly, right. So as Dave rightly mentioned, and Victor also alluded, right, there will always be a catch-up because attackers are motivated by revenue, and the control implementers need to look at cost and reduce cost, right? But when we look at basics, the other panelists just talked about basics as well. And what I would just want to add on there is looking at basics, but also looking at how do we automate and innovate in those basics, right? A good example is like, say, fraud rules. You can always have fraud rules, and we have been having fraud rules right from the early days. But how can we use machine learning, artificial intelligence to augment those fraud rules? So it provides better actionable intelligence to the human element, right? And that's where we need to continue to innovate, and that's where we are looking to continue to innovate. And as I said before, like, let's say we provide, platform as a service to our customers. So if they want fintech services, they can just connect to a platform, and these operations will then be given to them by default. So we can take care of the KYC and the AML operations. And the good thing about being a startup is there are some innovative products coming up. Gone are the days where you used to see a lot of innovation with the big players. But now there's a lot of good companies coming up with niche products. And that's been an interesting part of my job as well. Talk to these different products and the kind of innovation that we're bringing in terms of artificial intelligence, machine learning, that can not just help us improve the basics, but also try to bridge the gap between the attackers and the control implementers, right?
For sure. Thanks for that, Raj. Now, I just wanted to move back on to one of the points that Dave brought up earlier, right? And you're talking about the whole triangle of compliance, convenience, and of course, compliance is often cited as something that's a friction for user experience. But on the flip side, having been a victim of fraudulent transactions recently, I've come to the conclusion that being part of that experience is the worst user experience you possibly can have with an institution. So how do we improve this whole experience of complying and coming up with safeguards for the users, having a balance to all these things?
I can speak to that if you want.
Sure, go ahead.
Was that directed to Dev? Oh, sorry.
Directed to Dev, and then later you could definitely add on to that for sure.
Victor, go ahead. You can.
Okay. The one thing I was going to say, I think we all talked about the friction in user experience when it comes to fraud controls. everybody thinks it's a bad thing. I have a theory that some of our customers quite value it. As we go into this world where we see increasing media attention, people are aware of online frauds. They like to see, I think there's some value in showing the customer that we take their security seriously. Now, is there still customer friction? Yes. How do you do that? You need to minimize it, keep the friction low, but still gain the maximum impact. It's based mostly on data profiling.
Thank you for that. And Dave, do you want to add on to
Yeah, I mean, actually, as someone who just made a cross-border payment myself this last week, and unfortunately, I didn't use Neum, so I apologise. It was, to your point, Victor, it was comforting to receive a call to say, did you really mean to send this? And can I just check the account details, et cetera, et cetera? And so I think you're right, actually, for sure. Some friction is needed. I think, look, the key is for good actors and good customers, low to no friction. For bad actors and fraudsters, high friction. It's as simple as that. To Victor's point, how can you make that categorization? It's got to be through data. I mean, that's the world we live in today. So how can you use some of that to profile, to assess, to collect what you need for what looks to be a good customer, and ask for a lot more, and actually manually intervene for accounts that look to be dubious or potentially fraudulent. And again, in the way you talk to your customer to explain that, if the good customer gets caught up in that friction, normally if you explain to them why it is that's happened, and it's for their own benefit, they're normally quite comforted. So again, it comes back to how you interact with your customer and how you share that message.
Seems like the communication is key, and I suppose there's a certain level of comfort to know that there are kind of steps that have been taken to safeguard your money and whatnot. Thanks for that, Dave. Raj, do you have anything to add in terms of how we can achieve that kind of balance between the friction and the user convenience, especially within the cross-border space where a lot of the delay in transfers is caused by compliance needs, right?
Yeah, and that's the entire reason for Neum coming into existence to remove this friction. And this will be a constant journey. And I want to reiterate what they've said. Right, looking at risk-based controls augmented by artificial intelligence and machine learning can really reduce some of those controls. For example, let's say, Vincent, you are making a transaction. You can make two transactions. One of them could be risky. One of them may not be risky, but you need not apply the same rules, right? So you don't need to be asked for like a additional authentication method, like an OTP-based authentication for every transaction you make. We can make that seamless by augmenting our fraud rules and looking at other user behavior metrics and profile metrics to reduce some of that friction. Like in the past, we used to have like a dollar threshold. Okay, anything, let's say about $1,000 need to be reviewed. But why, right? Can we apply some of these learnings that we have received? We have good tools available now to look at the profile and understand the risk scoring on that. And then based on that, we can reduce the friction. So not every $1,000 payment needs to go for a review. And that's where we need to keep on focusing and reduce the friction at the same time, not compromising on the security angle.
Just basically looking at the proportionality of the things. So that's an excellent point. Thanks for raising that, Raj. Now, just to switch gears a little bit right now, of course, as institutions, as companies, we can kind of do our best and implement the latest technologies, come up with the latest governance to protect our users. But sometimes, security is as strong as your weakest link, and sometimes the weakest link does not even exist within our industry, right? And in these past few years, we've seen so much data leaks. Like in Malaysia, it was quite interesting. The entire database of our national identity system, for those who are born between the 80s till now, was leaked, and it's only sold for 30,000 ringgit, which is about $10,000. So great sale, right? Very cheap. Then we have telco data leaks, and we have a variety of leaks that's happening all around Asia and all around the world. And with this kind of data that's actually available in the market for cheap, social engineering becomes very easy because you have all this kind of data in hand. So, maybe we can start with Victor and then Dave. Victor, how can we protect our users when there's so much data leak that's actually out there?
The frankness here is, I think everybody listening to this or anybody on this call has been a subject of a data leak at some point. There are databases out there with all sorts of information on all of us. Now, how do you manage that? You cannot. It is about going to the profiling of your customers and their interaction with the tool. Do not just rely on putting in the CCV number and the expiry date and the OTP. You need to be looking at how is this customer engaging with your bank to perform transactions, and is that in line with their previous behaviors? That's one of the key elements to combating people who try to use unauthorized data to get in to do unauthorized transfers. I might have some more points, but let me think about it.
Sure, no worries. Meanwhile, we'll move on to Dev while you kind of sit on those
Yeah,
points.
I'll
Dev, what are your views?
yeah, maybe just take it from a slightly different angle and then come back to the question. But I think, look, it's on all of us to protect our own data as well, right? So, how many of us on this call still have a password that's not a strong password? How many of us are still using our date of birth for pins and things like that? So I think we have to help ourselves first as consumers. So that goes without saying. If you then come back to the question around the industry and what it should do, I think to Victor's point, we absolutely have to expect the institutions we deal with to put the right tools and techniques in place to protect us. We trust them with lots of things, and we expect them to respect our trust and continue to keep our trust. So that may be techniques, as Victor said, around behavioral biometrics. So with some of the solutions that we operate, we can detect if a bot is copying and pasting large sums of data, because no human being copies and pastes everything. And that's associated with, I found all this data, I've got these 50,000 records, I want to apply for 50,000 credit cards or whatever the case may be. But I think the other thing is just being really clear that as we talked about earlier, we want more convenience. There is an inherent fraud risk in that. And so really, actually, what a lot of this comes back to is, how does an institution respond when its data is leaked? How am I as a consumer communicated with? What steps are they taking to protect my identity? Are they giving me solutions that can help me do that? And I think you've seen through lots of big institutions that have suffered these unfortunate instances, the reaction has actually been the key. I think consumers kind of get that this is going to happen once in a lifetime, more so than ever before. But if my bank, telco, etc., take steps to tell me what's happened, give me measures to keep me protected, I'm that much more likely to stay with them and continue to trust them with my future transactions.
Yeah,
In your
on that,
view, go ahead with that. Yeah,
I was just
Go
going to
ahead.
say,
Yeah.
I seen some institutions which get very scared to talk about data leaks with their customers. For example, they might find out that a customer's banking information has been leaked. The bank, not my current bank, what might have issues bringing that up with the customer, because there'd be questions about, where did the data come from? And the bank's leadership didn't feel comfortable answering those questions. But that is not what the focus should be on. It should be on making sure, as Dev pointed out, your customer is aware. They're changing their password. They're looking at their most recent transactions. Your customers need to be aware if they are potentially the victim of a data leakage, and try to correct those vulnerability points for themselves. But that involves the bank letting their customers know when they're aware of potential vulnerabilities in their customer bank base.
For sure. But, just to add on to this whole conversation about data leaks, I want to get your views on whether or not consumers are pushing back and holding corporations accountable enough, right? Because, just a couple of years back, we have this huge data leak from Facebook, and yet you don't really see that huge of a pushback from a lot of consumers around the world. It seems like they still continue using Facebook, right? And is that something that you think consumers need to kind of band together and hold corporations more accountable, you think?
I think people are kind of used to having their data leaked now. There's a big,
Just another day.
I'm not going to name it, but there's a massive food delivery company which is
Hmm.
notorious for its weak fraud controls, but people still use it because they want to get the food. And so I don't think consumers get that upset anymore about data leaks. It's more of a government reaction to it. They will get upset if they eventually get defrauded from it. But yeah, I think there's almost an expectation that an element of your data is going to be out there.
So people have considered that for this convenience, we have to live with some data leaks here and there.
Vincent, I think
Do you have
it
anything?
also depends.
Yes.
I think it also
Go
depends
ahead.
I think it also depends by market. So I think
Mm.
in a more mature, established economy, it's far quicker and easier to lose your customers' trust because they have higher expectations. They have a lower tolerance for fraud. I think in markets that are emerging, so take Vietnam, the price that people are prepared to pay for the convenience is that they have a lower intolerance for fraud. So they will be less likely to switch. I think in some markets, you lose customer data, your customers switch. I think in others, do a couple more tries, but that will get less and less the case as these markets mature and customer expectations rise.
Yeah, on the
That's a very good
liability
point.
model aspect of it, we're seeing movement in the UK, especially in the UK banking space, where banks are taking on more liability for people who are defrauded. Now, it's kind of unfair if the data leak comes from somewhere else to get they get defrauded through a transaction going through your bank. Your bank might be more liable to be held liable in those cases to refund the customer. However, it is becoming a bit of a marketing tool. We will refund you if you get defrauded. So some banks are actually embracing the liability of it to position themselves in the market differently. So fraud is a marketable element now.
It's become part of your product feature, right?
Yeah.
Something as an assurance to your
We've seen some
customers.
banks go down that road.
For sure. And Raj, do you have anything
Yep.
to add to these two questions that we were asking, right? So one is the emergence of all these leaks and whether or not consumers are doing enough to push back to hold the corporations accountable. Raj, you have the floor.
Yeah, I think Dave mentioned some good points about the tolerance levels as well, right? But what we also need to understand is data leaks will happen, right? And you might have the best of controls, you have taken all the preventive measures, but we are fighting an uphill battle, right, against the attackers who are motivated by big revenues and have big financial resources right now, right? So the intent is, one, obviously, have you taken the right measures to put the right controls augmented by technology? And second, even if after data leak happens, how do you mitigate the damage, right? It will be a good message to say to our customers, hey, data leak did happen, but we have reduced the financial impact because of these things, right? We have these controls, we are providing fraud monitoring controls, and even if someone is trying to misuse that information, no, you are protected. That's a much better story to tell to our customers instead of saying, hey, we lost your data, right? And that's where the focus needs to be. And because there's no way we can make sure that we complete all the data or stop all data leakages. And just trying to understand why we cannot prevent and why are the attackers so motivated, right? You must have seen a good linkage between rise of cryptocurrencies and all the other attacks as well. For example, if you look at ransomware, the huge increase in ransomware incidents. Earlier days, ransomware attacks used to happen, but the victims were told, okay, use Western Union to do a money transfer to this account, or hand over this money to a person, or buy some cash cards. Obviously, that's not lucrative for a big cyber criminal operation, right? They don't care about such stuff. And things changed when we had cryptocurrency. Although cryptocurrencies don't directly deal with enabling a ransomware, but they have indirectly enabled them to have a huge financial resource. So now we're talking about millions and millions of dollars of ransom being asked, and because they have enabled this, and cryptocurrencies have enabled these huge organizations to get involved, and now they have this big muscle power, and they have huge resources and the motivation to perform these kind of attacks.
And that segues nicely into my next question, right? And of course, the introduction of cryptocurrency has really changed the way we do things. And there are even privacy coins out there like Monero, which is favored by a lot of these bad actors, right? And then you have a lot of central banks looking at using wholesale CDBCs to do remittance and cross-border transfers. So maybe we can start with you, and then we'll go to Victor and then Dave. How do you see the introduction of cryptocurrencies, digital assets, decentralized finance, digital currencies shaping the way we fight financial crime?
Yeah, very much. So we're almost in the similar stage like we were in the dot-com era of the past, where we were still trying to mature. A lot of companies went bust, but still some companies did get through following some good controls and regulations. I think we are somewhat kind of in a similar stage in the next disruptive technology. Cryptocurrencies are not going anywhere, right? Uh, and the challenge with the cryptocurrency is you can call it like pseudo anonymous. We know which address the money is getting sent to, but we don't know who is owning that address. So there's no strong linkage between the owner and the Bitcoin address. In fact, one private firm looked at some of the transactions, and just in the year 2020, just one Bitcoin, just the Bitcoin currency alone, there were almost $3.5 billion of transactions done from potentially criminally associated Bitcoin addresses, just one currency, right? And because of the exact reason why, because it's pseudo-anonymous. It's very difficult to get a trail and look at which actors are using or getting utilization of those currencies. And what we also need to look at is how do we cater to that problem, right? And for that, we need to go back to technology. Technologies like blockchain analytics are getting used a lot by even the investigation agencies to understand the money trail. So that's a key focus that we need to look at technology and trying to address the challenges that cryptocurrencies are currently bringing in.
For sure, and there's specialized blockchain audit firms emerging because of this as well, right? So things are definitely changing as well. Thanks for your viewpoints. Moving along to Victor. Victor, how do you see crypto, digital currencies, and all these things shaping financial crime?
I think that another key one, which is impacting a lot of our work, is faster payment systems. Money can move really quickly now. You don't necessarily need to use cryptocurrency. They're exploring faster payment systems, almost immediate settlement cross-border. So money moves quickly now, and it makes it hard to catch it. So that's one of the challenges we deal with. In terms of digital assets, I know most money laundering and financial crime people run away from them because they don't understand them. But as Raj pointed out, chain analysis, it's just a different ballgame. You can get an understanding of all the transactions which occurs on a certain blockchain. Pardon me if I'm not using the exact right technical language, but where we don't know is who holds the wallet necessarily all the time. So it becomes a different KYC issue. But if you think about money laundering, once something gets put into currency or fiat, you have no tracing on that. So the tracing allowed in digital assets can be a little bit of a game changer. I guess one of the areas where I'm more focused on these days is in decentralized finance as we look at partners and the use of APIs and sharing sensitive information. It's about that security and making sure you're trusting the right people with that and getting that confidence. So my final point, though, be scattered, is it's an evolving space and banks can't be scared of it. They need to understand the financial crime risks behind it and tackle them head on.
I mean, speaking of Hong Kong's faster payment system, in Singapore, in Malaysia, in Thailand, in Indonesia, we all have our version of that, right? And they're linking this up to do real-time cross-border transfers.
Yeah, isn't
So that's
Singapore and
another
Malaysia
dimension.
doing one soon? And so that's what we're talking
Yeah.
about. Like money's going to be able to keep going quickly. And, once it's gone, really these days, we expect it to be gone. I mean, back in the days when if you got there and you could block the SWIFT transfer, maybe. But if it's being sent out in FPS, I'm like, good luck.
So we really need to step things up to match with all this
and
real-time payment systems.
A lot of it needs to be preventative instead of detective. And which goes back to all our discussions about customer friction and all that sort of stuff. But once the money goes now, it's gone. Whether it's in a digital asset or an FPS, it's gone. So
Mm.
that's why preventative controls are such a key element to our fraud risk
For sure.
management regime.
Times are changing. Yeah, Dev, thanks for that, Victor. Dev, do you have anything to add about how cryptocurrencies, digital assets, and whatnot shaping the financial crime landscape?
Not a huge amount, Vincent. To be honest, it's
Mm.
it's not my specialist subject. But what I would say
Mm.
is looking at it from
Mhm.
a more of a consumer angle. Outside in, people see these currencies and they see these guys getting filthy rich, and what do people, as much as fraudsters want to make money, so do consumers. And
Mm.
I think the risk that I see is actually more of on the social engineering, on the scam side.
Mm.
People start to become greedy, for want of a better word, and get involved in things that they don't fully understand. They think there's a quick buck to be made for them, and it's, I think, just another potential scam that we could start to see more of, if we're not seeing already.
For
Dev
sure.
brings up a very good
We've-
point.
Mm.
As we used to think that only old ladies fall for frauds, but there was a recent study done by, I want to say, the SFC here, which showed that they ran their own fake fraud campaign, and they looked at the demographics of who fell for it, and it was lots of young people, lots of people in their 20s. They
Really?
are. It is not just, and so it makes you realize that everybody's vulnerable to social engineering, especially online. So, yeah, that was a very good point in terms of social engineering, especially in the digital age, being another
Mm.
increasing threat factor that banks have to fight.
Well, that's actually a fascinating stat, right? Because you would imagine that the digital natives are less susceptible to these things, but it turns out they are very vulnerable to it as well. That's
Yeah,
fascinating.
We found
For sure.
Vincent, in some of the surveys that
Mhm.
we've been running recently, we found that actually young males in many of the emerging markets of Asia are more susceptible to social engineering scams. And there's obviously
Mm.
lots of reasons why that might be: desire for status, some of the
Mhm.
things that come along with increased wealth in some of the markets that we're talking about. But yeah, it is absolutely something that pervasive across the spectrum, and it's not just a small segment of our society that falls for these things.
yeah. Our
That's really
definition of vulnerable
fascinating.
customers
Yeah.
has to be expanded.
Absolutely, yeah.
Yeah. I mean, it kind of reshaped my own preconceived notion of who are typically the victims of these things, right? But also to Dev's point, greed is also a big factor as well. So if you look at Bitcoin being at 64,000 US dollars today, and then people be like, hey, I should jump in on this, and then fraudsters will kind of take advantage of that. So, yeah, I mean, that's another dimension of financial crime that could emerge from all these new kind of assets that's emerging, right? Um, so I just want to quickly go back to the point of regulation, right? Because earlier we spoke about how consumers should also push to hold corporations accountable. But of course, no one's more effective in doing that than regulators. So I guess my question to Dave, and then to Raj, and then to Victor: are regulations sufficient right now in safeguarding and ensuring that corporations are doing what they need to protect their users?
Yeah, but Vincent, the last time you asked me this question, we had the Central Bank of the Philippines on the call, which was a very difficult place. So, but you never know who's watching. So I will plead the fifth. What I would say is regulations are only part of the equation. We've seen in many markets where regulation exists, FIs and others don't actually implement what they should. And I think, again, it comes back to FIs taking responsibility for the trust that consumers put in them, and not just FIs, obviously, also some of the new entrants into the financial and other consumer ecosystems. So yeah, look, regulation, there can always be more. It's selfishly, it's great for our business when there is more regulation. It generates more projects. So I will always say there should be more. But I think again, it also comes down to why are we actually doing what we're doing, and how serious this problem actually is, because it is enormous. And then making sure that the various constituents of the ecosystem are all doing what they then need to do.
All right. Thank you for that, Dave. Let's move on to Raj. What are your thoughts on the current regulations?
Yeah, sure. I think regulators are trying to evolve in this space as well. There are some regulators who have already done some good jobs. Singapore is one example. They're already talking about cryptocurrency regulations, payments in the payment sector. But there's some inherent challenges as well, right? It's this topic is a bit more complex than it is. So, for example, let's say there is no agreed taxonomy on how do you classify these crypto assets. Right? So you talked about payments, right? Cryptocurrency can be used for payments. It could be used as an investment instrument. Right? It could be used as a security, right? So trading. So there are a lot of different usages of crypto assets, and that kind of complicates the regulatory angle as well, right? For example, which regulation do you look at? Do you look at the securities? Do you look at your KYC AML regulations and expand those regulations to include crypto assets, or you need to have something different? And these are some of the questions that the regulators are also pondering on and trying to work out what's working best. And I think what we have also seen in the past is there's one regulator that comes up with a good framework, and then there's a quick adoption across the different markets, right? And that's what we had seen in KYC, AML, and probably will see in this sector as well. But what is more important is crypto assets being inherently so global in nature, right? There's a lot more needed for international cooperation. It's not sufficient that the Singapore regulators have come up with a good framework or US regulator has come with a good framework. What is more key is international cooperation in this, and we come up with a good framework that can be applied globally, because that's how the inherent nature of crypto assets are.
And I think on top of international cooperation, domestically, the securities regulator also need to work together with the central bank as well, right? Because unlike Singapore, it's like one single entity. I think a lot of other countries, sometimes they also struggling to have this interagency cooperation to deal with crypto payments and crypto assets as well. Thanks for that insight, Raj. Let's move on to Victor. Victor, from where you stand, do you think the current regulations are sufficient? What are some gaps that you're seeing?
Given my interactions with some of the regulators in Asia, I'm going to speak very broadly about this. I think there's a greater focus on consumer, individual being defrauded, and you know what? I'm going to give the HKMA some credit for their TME1, which is a manual around e-banking and some of the controls in there. It's a pretty good piece of regulation. I think it's fair and it's quite detailed, and yeah. So I'm going to leave my comments there. There's an increasing focus on customers being defrauded, especially in the consumer banking space. Some regulators are getting there, but even when they release a manual on it, that takes 2 or 3 years to come to fruition. So it's an ongoing process.
All right. Okay,
That was a very
let's leave it at that.
bland answer. Sorry.
It's a diplomatic answer. No worries. We get it. Okay. So before we move on to closing thoughts and the final question, we have one question from the audience. I'm going to bring it up here, and whoever would like to take the question, you're welcome to take it. Sin Hin Teo is asking, what is the best way for regulators, the industry basically, to mitigate financial crime, scams, and social engineering? So basically quite a broad question over here.
Sure, I can probably start with
Sure.
So what we are seeing is not any new type of attacks, but the age-old attacks being augmented with technology. Just like we are trying to augment our controls with technology, even the fraudsters are doing that. But the earlier point on younger people getting scammed, it's because it's not just a phishing email of the past. They're using AI and ML, artificial intelligence and machine learning, to mimic their styles, right? They're looking at user behavior and crafting emails that are more believable, right? And that's where they're using technology to make these attacks more successful. And that's where we need to keep on focusing on looking at what are our foundational controls, and looking at each of those foundational controls and say how we can make it better, how we can use the innovative technology, the niche products that are coming in, not to replace the human element, but augment that with additional additional actionable intelligence. And also, what is more important is there was always a tendency to use automation to, let's say, how we can save cost or replace headcount. And there's also a tendency to, let's say, how do we put more manpower into the problem. I think there needs to be a balance between the two, right? So use technology and then augment our existing foundational controls to make sure that it's more effective and efficient.
Thank you for that, Raj. We
I
have
think,
time for
Vincent,
another quick comment. Yes, go
The
ahead.
only thing I would add to that, just to come back to
Mm,
it, is actually, there's a point that a few of us have made on the call, is the regulator can help drive some of the data sharing that we know helps close these rings more quickly. So I think, for example, in Malaysia, where we operate with our partner CETOS, an ID guard service, which is a fraud sharing initiative, we've seen significant returns of frauds that have been prevented and detected by just simply sharing information between FIs. Because, like I said, fraudsters, they don't care if the money comes from StanChart or HSBC. They're not brand loyal in where they defraud. So just more that we can have regulators drive that ecosystem, that would be welcomed.
For sure, I think data would be key in moving forward in this battle against financial crime. So we've unfortunately run out of time. Maybe we'll just do quick closing thoughts from each of the panelists. And since we have Dev on the floor, we'll start with Dev. Dev, give us a sense of how you see financial crime evolving over the next few years. And what are some of the points that you would also like to leave our audience with today before we go?
More complex, more typologies, but at the heart of it, it's human beings, right? So it is it's a very close to home, driven by human interaction, human behavior, and the things that make us tick, which drives the reason why some people respond to a fraudulent email and others don't. So for me, it's really about making sure that as financial institutions, really taking seriously the trust your consumers are putting in you, putting in place as much protection as you possibly can, making sure that you're differentiating between good customers and potentially fraudulent customers, and like I said, just making sure that you're conscious that as you deliver more services and you provide new ways of doing business, you're going to be open to more vulnerability, and making sure that you're closing those doors pretty quickly. But I think we're going to see more typologies emerge. We're going to see more complexity. It's not an area that's going to go away. We're going to very quickly, I think, be into 5.0.
I'm sure it'll continue to evolve. Hopefully, it will stay 4.0 longer before it evolves into 5.0. Thank you for that, Dev. Let's move on to Raj. What is your closing thoughts, and how do you see financial crime evolving in the medium to long term?
Yeah, I mean, the trends are going to continue, right? As they rightly mentioned, it's not going anywhere. It will get more complex and with more potential for getting more threat actors involved. It will get more and more complex. But what I want to tell the guests is, or probably a suggestion is, now just take a look at what you have currently. Right? You don't need to look at some brand new innovative controls, but just look at what you already have. Just make a list of those controls that you have to mitigate financial crime, and then ask yourself a question: okay, what can we do in some of these areas which can make that control better? And a good thing that really helped me is talk to a lot of these niche product companies that are coming up. One, it enhances your understanding of the new controls that are coming up, and also provides an innovative way for augmenting some of these controls. Right? So that has really helped me, and I would probably suggest the same for our audience as well.
Thank you for that, Raj. And let's move on to Victor for his closing thoughts.
The future of financial crime, I don't know. That's why I do this job, because it always changes and surprises me. I think going back, how we manage it going forward, sharing of data, not just transactional data, but lessons learned and new typologies, and people getting that information need to take that extra step and actually do gap analyses and see where they're vulnerable to these typologies. Education, both for frontline staff and for clients, maintains is important. Get that skeptical view out there. Do multiple channels. People just ignore emails these days. So you need to think about how that communication's landing. Again, as Raj brought up, focus on your foundations, make sure those are strong, and then use the data you have to profile what your customers should be behaving like so that you can flag aberrant behavior.
Great. Thank you for that. And with that note, it's a nice note to end the session. I'd like to thank everyone for tuning in and thank all the speakers for sharing their views. It's been very enlightening. There's some preconceived notions that I changed during this session. So really appreciate everyone spending the time. Take care now and have a good rest of the afternoon. Bye bye now.
Thank you.